Hey, what's up? Today is Tuesday, the 6th of February, 2024. Going over the positions here real quick. SPY is just 2 free hedges, so I'm not doing anything there. XSP is 2 of these bear traps, 1122s, and they're just moving along. This one's at 50%, so it's kind of getting close. I have an order here for 19 cents. It's at 31. I think that's about 70% of the max profit on that one, and then that'll be a free hedge. But for now, nothing going on there. That's been open 21 days. This one's only been open 4 days. It's down $7 total. So yeah, nothing to do there. And then up here in the MES is where I want to do something. Mainly this one right here, this 112 has been open for 33 days. The two shorts are up 64%, and I have an order down here at 550, but I think I just want to take this off. And yeah, because if you look at the market real quick, we've just kind of been going up and up and up since, October. So it'll last like 3 months, and we've basically had no correction at all. We had this sideways movement here that was negative 2.88 for a little while. We've gone up 20%, I think, or more. So, and you can see this channel here. We've been in this channel since the October 2022 low. And then we came up, we hit it, chopped sideways for a while, hit it again, went all the way down, and then now we're all the way back to the top. So it just kind of makes sense. I don't really believe much in this technical analysis stuff, but it would just kind of make sense that we would have a little bit of a pullback here. So, last time we were up here, this chopped around near the top trend line in a range of 2.36%, and it was 14 trading days, which was 20 calendar days. Maybe this will do the same thing. If we did that, 20 calendar days, let's say this was the first day, so that was the 2nd of February. So, approximately by February 22nd, this, would do the similar thing, chop around here, and then finally come down for, I'm not trying for some huge correction. I just want to see something normal, come back to the 50 moving average would be like a 4% correction, I think. So somewhere between like a 2 to 5% correction, and my hedges would start paying off pretty well. So that's all I'm looking for with the market going up like that. This is at 64%. I think I'm just going to take the profit while I got it, and yeah, get this closed out. So I was hoping for 550. Right now it's at 570. Try 65. Oh, there we go, 570. Yeah, 570 got filled at. So bring up the chart here, or the spreadsheet. That's the 4,000, I believe. Yep, 4,000, April 19th. So that is right here. And we closed that today, which is the 6th of February, 32 days. And I closed that for 5.7. And I'm pretty sure those fees are all the same, but I guess I'll double check. $1.04. Yep, $1.04. So I made $95.42 after the fees. And then that's 63.8% of the max profit before fees. And then these fields here, IV rank close 11.5. Share price 5020.75, and that's a winner. This turns into a free hedge. And yeah, the market's up $270. So no wonder that worked. Pretty self-explanatory there. The position is bullish and the market went up, so I made money. So after fees, put these two together with my free hedge accounted for, I just made $51.25 down here. And yeah, that's great. That's kind of what I'm looking for on the smaller account, is like if I can win $50 per trade, that's going to be pretty good for my little account here. And you know, my overall P&L is, it's been hovering around anywhere from like 1990 up to, I think for one brief day it was like 2030 or something. But it's kind of just been bouncing around here for this 40-ish dollar range. So it seems like with this whole 112 thing, you know, you either need a long bull run or you need to have a market pullback and then your hedges start to kick in. And that's when you really start to make some money. So I either just need to wait it out here a few more months and then in theory, you know, and make another, if I make another 50 bucks on my next one, you know, that would put me up around the, what, 2030, 2040 range. So that would be a high for the year if that happened. And it would finally be in the green with the fees. So anyways, let's, I'm going to ungroup this. Need to rename it to, I guess it was 112-2 free hedge. All right, so here's the free hedge. Now if we go take a look at the profit curve here, the analysis, zoom all the way out, and here we go. So still have this nice hump here because of my hedges, mainly because of that at the money hedge that's in the earlier expiration. But so now in theory, if the market just keeps going up, at expiration I would lose $178. So that doesn't look great, obviously. So I need to sell another position or make some adjustments so this becomes smaller, right? And ultimately, I want it to be green. So this is with all my hedges on and everything. And one adjustment I'm going to make here is on this hedge that I put on, I guess 19 days ago. This original hedge that I guess Sweet Bobby uses, or people call it the Black Swan hedge. I guess I'm just going to stick with it, but I'm going to roll, you know, this one is at 46.2% of the profit, and I'm just going to roll that up to a more aggressive strike, so I'm going to get more credit, right? So if we look at this trade real quick, this is on the 101 day. So come here to 101. And it's this one right here. So when I originally opened this hedge, I had the one short and the three longs. And this one short was at the 10 delta. Right now it's only at the 6 delta. It was 5 delta earlier today. But anyways, it's, you know, it's gotten enough off. So I'm going to roll this sucker up to be a little more aggressive and get more credit. So the 6, come up here to the 10. I don't know if I want to match it with another trade I already have, so I'll do this one instead. Gives me a $13 credit, so times that by 5. 13 times 5, that'd be $65 credit. And then it still claims that single position will have a 94% pop. That's great. And let's see, let's look at the curve here when I do that. So it was 178 and then it reduces it by 65, so that gets down to 112, right? And then this orange line with the hedges, I still have this big kicker here. If it drops, you know, 3 to 5%, I guess 4,500 would be 10%. So yeah, if I could get like a 3 to 5% drop, this hedge would really kick in. And then assuming there's no massive market crash, I would collect that hedge. I might put on another one and then sell some more shorts. So anyways, that'll reduce that by 65 bucks, which is good. So let's go ahead and do that. Will this let me do one order? Oh, I think it might. So in theory, I want to get more credit. I swear it always ticks one tick the other direction as soon as I open the order. All right, got it filled for 13. Come here to activity. So there we go, 13. Actually, this might be a little confusing because I should have done that in separate trades. But anyways, come here to history and I can see exactly what stuff cost. Come here to my spreadsheet. And this was the first hedge. I had this 4,200 short put. And I'm closing that today on 2/6, 19 days. I bought that back for $14.50. So I sold it for $26.50, buying it back for $14.50. The fee at 46 cents. All right, so I made $57.52 after fees. So that's 45.3%, 12.4, 50.14 on this expiration. Call that a winner. All right, so now that was part of Hedge 1. So just gonna copy this one. Yep, copy that one. So Hedge 1, and it's now gonna be this one. I sold the 4,500 short put. Expiration is still the 17th of May, 101. Opened it today, which is 2/6, just one, and I sold that for 27.5. The delta, that might have been an 11 delta, I think. It's 4,500, yeah, 11 delta. And I think it said 94%. Where does it go? 94. IV open 12.3. Share price open 50, 16.50. So if we add up all these debits and credits, so I got that one and this one, and then, well, those two alone. So instead of this costing $2.34, it's now only down to $1.77.29. And then in theory, if this one would go to 0, the grand total position would only be negative $42 for this hedge, right? But in reality, I'll probably wait another 2 or 3 weeks, and then assuming everything's working, I'll do the same thing. I'll roll this up again and just keep doing the same thing, rinse and repeat, right? All right, double checking the curve here after all these trades have been entered and executed. We are now at, I guess I was off earlier, 173 is the max loss if this just keeps going up. At this point, I have 4 short delta up here. So with that negative 4 delta, I need this to come down and I'll start making money pretty quickly. Otherwise, you know, these longer 112s and 1122s are just kind of bleeding out and they're getting their profit. But yeah, I guess, you know, for now, I'm not going to open any more. I need to get, just waiting for like a solid down day or two. I guess in hindsight, I should have sold some more 112s on this down day here. But who knows, maybe this is finally topping out and this will finally crash down into here somewhere. And then I'll definitely start selling. But for now, I guess I'm just going to wait until something sells off. I have no idea what's going to trigger it. I mean, all these chip stocks like Nvidia and stuff are just sky high right now. So something's got to give. It's like the .com bubble 2.0, man. They can't go up forever. So anyways, hopefully there's some sort of correction here in the next few weeks and I can open some new 112 bear traps. But for now, that's it. This is what my curve looks like right now. And it'd be sweet to get a couple down days, come down to 4,800, which would be like a 2 or 3% correction. I mean, I'd be making some good money there. So In theory, this says $274. I would definitely take that. So, all right, I've rambled on enough. I'll see you guys later. Thanks for tuning in.